All right, everybody. Happy January. I can't believe it's already 2025. I am Stephen Brock, the brutally honest loan officer, and I'm here to kind of bring you the latest on mortgage interest rates, what we're seeing, what economists are forecasting for the rest of the year. But let's dive into what's happening, at least over the last past 30 days in the rate market. And I'll share predictions from the top economists about where rates might actually end up this year. So if you're thinking about buying, selling, or even just renting, this info you must need it. And a lot of people assume though first is that when you're working with a lender, it means jumping straight into credit pulls, those long, tedious forms. Well, not with me. I first do a planning consultation, a discovery call where we actually discuss that I call them the three F's, your fears, your FICO score, and your finances. So just so you know, we're never going to be pushy, and my objective of being in this business is to sincerely help every single family I can make a good decision. And when it comes to their home finances. So let's talk rates. Now, let's look at what's actually happening in the rate market. And if you follow me, you guys all know that I really, really follow and track the mortgage-backed securities, the MBS. So let me share my screen with you real quick. And also, these are mortgage bonds. So as the value of these bonds changes, so do mortgage rates. And here's the key thing to know. Rates move daily, sometimes even multiple times a day. And just because you have a rate on your pre-approval letter or your pre-qual, doesn't mean it's locked. It's just a placeholder that the lender used to make sure you're pre-approved until you officially lock in your rate. Recently, we have seen rates kind of climb, slightly after some improvement in December. So this is where you can see each of these little candlesticks is where rates have moved every single day. So some days they move a lot, some days they don't. You can see here as this was going down, this was during the election. Election is over, and we have a new president coming in, and the rates started to actually get better. So when this actually increases, rates are actually going down. So as the bond gets more expensive, the rates go down. Basically, think of this as basically a stock market. It is a bond. So you have the bond market and the stock market out there. As you can see in December, we started going down. The Fed said maybe they weren't going to do as many things as they expected to do in 2025, but as you can see throughout the end of the year, kind of just stabilized out from that. Almost back to where we were pre-election on there. Now, I also want to bring up is recently, though the rates have climbed, a lot of times what we're seeing out there is is people looking at rates, promising people rates in the fours and fives. So I want to bring up mortgage rates daily or mortgage news daily, and you can go to mortgage rates. This is the average nationally of what rates are looking like. So you can see here on a 30-year fix, a 6.11 to 7.5. That's national average for a 30-year fix, no matter what. If you're putting somebody's putting 3% down with a 600 credit score to somebody putting 50% down with an 800 credit score. Now, a lot of things go into factor of this, but this is just give you a kind of a clue to see when somebody is quoting you a rate that seems too good to be true and you're not knowing that you are paying points on it, you're most likely it is too good to be true. And there's a lot of bait and switch out there. So I wanted to just, this is where you can easily see it and you can kind of see where the averages are for everybody nationally out there on your loan type. So you can kind of determine what you're seeing online out there too. Now, so we're just kind of I want you to pull back the curtain. So I'm pulling back the curtain where a lot of lenders aren't going to show you. So your specific rate will depend on factors like your credit score, your down payment, all stuff. Once you're working with us and you go under contract, we actually shop over 30 different banks, and for you, we'll actually show you the rate board, all the different rates of all the different banks, what they're offering. But kind of gives you a this is to give you an idea of where the trends are going. So again, it's going to be an average snapshot that you're seeing. So at least gives you an accurate information because almost anything that you see online, and I like to call it that clickbait advertisement, it involves you, and I just want you to be careful because a lot of times they will show you a low rate, but then they will actually give you a high rate with no cost, or try to get you that low rate and make you pay a lot of money out of pocket that you weren't expecting. So, um, But let's get back to interest rate forecast to go. That's our big topic here. And so many people want to know. And I'm going to tell you that I'm going to show you where the forecasts are. But before I get into that, I want to be super clear. No matter what the average interest rate is today, we have loan programs that can get you up to 2 points lower. Now, I just showed you the national average. Well, heck, Steven, like, why didn't you tell me about these 2 points lower, beforehand? That's because it's a strategy that involves me and your real estate agent. And when you're making the offer, because I don't want you to pay to get that lower rate. I want the seller to pay for it. But that's why when you work with us, it's really important that you're involved and you're working with a real estate agent, and a lender that know these strategies because what I've seen is that some of these lenders are just not aware of these strategies at all. So these programs are really popular and the seller pays for it. It's a great benefit for you. You can get some closing costs covered and you get a lower payment and you get a lower rate that's a lot, there's a lot of different ways that we can put that, Rubik's cube together for you, but you need to be working with a strategist. So let's get, to really get that to work out. I'm just trying to just a little pun put in there with it. So let's get to the rate forecast of 2025. So every January, the economists from major organizations like Freddie Mac and Fannie Mae, Redfin, they release their forecasts for the year. So what is the consensus for 2025? Let me share my screen with you guys again. So here are what the rates were looking like from 2019 to what they're predicting to 2025. And why I want to show you all this is you have the actual rate here, Freddie Mac, Fannie Mae, Redfin, Goldman Sachs, NBA, that's a Mortgage Banker Association, NAR, the National Association of Realtors, Zillow. So as you can see here, here's a winner who actually predicted it and got it right. Well, you had a lot of Redfin for the last 4 out of the 6 years. So Redfin, which has been one of the more accurate forecasters, predicts us to be about 6.45 by the end of 2025. Now, that's not drastically different than where we were this or in 2024, right? So if you're waiting for rates to hit, let's say the X number or in the fours or fives, you might be waiting a lot longer and you might actually be losing your opportunity cost that's out there. So I bring that up. So if you're in your current home right now, this message is a little bit different because all our messages are really tailored to each individual and their family and their financial situation. So if you're in your current home and you have a low interest rate and the home works for you, but you just might be bored with it, you might want to stay put for now. But if you're outgrowing the home and it's driving you nuts or the neighbors are driving you crazy and it's too much home or you need a downgrade or you can utilize that lower rate program I was talking about before to get you into a really attractive home so that you can be happy. But if you're a renter and you've been sitting on the sidelines and you're potentially paying rent or you're delaying equity that you could be building, let me show you the data. What happened to people who I said we're going to wait. I'm going to do this because I literally just had a scenario pulled up. So I was researching because our services, we actually monitor your finances and your mortgage even after you close. So I want to bring this up to you. So here's the truth though. The price you pay for a home is permanent, but the interest rate is actually temporary. So if you're renting or delaying purchase, you could be missing out on those equity gains. So I want to show you an example. I had a client that bought a house last year at 6.99%. Let me bring. So this is where they bought that house at last year $924,000. So fast forward, they bought this last year 6.99%. Fast forward um 12 months, now that house is worth in 1 year 9.5 or $951,000. That's a $27,000 gain in 1 year that they had. And they avoided wasting rent. So if they fast forward, if it's the same house, the same square footage, same everything, same rate. If they waited, their monthly payment would have gone up. Sorry, it's right over here. If they waited in a year, would have gone up about $600 or $167 plus the money they lost in rent. So if they were paying $4,000 in rent, that's 48 thousand dollars in rent they would have paid. So that would have been almost a $70,000 swing from one end to the other that they would have been missing out now. Now, Redfin is predicting, like we said, to be 6.4. And part of our services is to be watching what we put you on what's called our rate watch list. And so this is where we're monitoring your interest rates for you, your insurance, your taxes, all the stuff, because when rates eventually drop, they'll refinance at no cost out of their pocket. It's a rate redo program. It keeps everything within the loan, saving them in even more monthly. The point is, buying now means you're building equity sooner, even if rates aren't at their rock bottom. So let's just say they get to that 5.125 in a couple of years, and that's the scenario I have here. So let's say in 2 years it gets to that 5.1. So if you look at that cost right here, the difference that would have dropped them $600, right? Roughly about a $600 change that they would have seen. But you look over here, they would have lost $63,000 in equity if they waited. So I'm bringing this up because I think a lot of people, most people get scared about when it comes to buying a home in this market is, well, should I wait? And we get scared. That's a scary question to answer. And it's a lot easier to answer if we run an analysis like this for you. By the way, sometimes that analysis actually tells us you should wait. And I'm going to be unbiased here. I'll tell you the good, the bad, the ugly, each decision, but specifically if you're renting, here's what I want you to know. Um, we're still facing housing inventory shortages, right? These are driven by factors that there are more Gen X's, more Gen Z's out there, Y's, whatever they are, than they were in prior groups. Home construction post 2008, home builders, they just stopped building. And the current homeowners they're holding on to their low rate mortgages because they say, hey, I'll just rent this out and use it for retirement, which is a great strategy. And we can talk about that. But those homes are entering the market as they're not entering the market as pre-existing homes. So even with higher rates, home values have continued to rise. And it's a simple case of just supply and demand. So I'm going to always bring you guys the facts that are out there. I do these market updates so you can stay informed. I don't want you to fall for any of those online crap, that clickbait stuff, interest rate fear mongering. Like, I'm going to show you the good, the bad, and the ugly. So if you have any questions, you can call, text me, 561-246-8871. So this is to make you be able to make a better informed decision right now out there. So we're showing that the rates are probably going to stay in the mid sixes is what they're predicting. We're not too far off already from that, but the housing market is going to increase. The housing value keeps increasing with there. So there could be a loss of opportunity. Again, every scenario is different for every single person out there. And once you have all the data in your hand, that's when you can make the informed decision of what is best for you and in your situation.